XX. Hello, 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 everyone. So nice to see you all here. My name is Silvia, aka Crypto Empress. And Estonian Cryptocurrency Association welcomes all of you who came here to Palo Alto Club Tallinn today, and also everyone who is watching us live on the internet. So today's topic will be something that is actually a global problem everywhere, which is money laundering. And we want to compare it in the bank sector and also in the cryptocurrency section, industry. And we have two guest panelists who will come to share their thoughts and their ideas. One will be Mari-Liis Kurg, and the other one, sorry, I'm a bit nervous. Oliver Steinert, yes. So hope you all got some drinks over there. Pizza is now finished. So get ready and we can welcome our first guest panelist, who will be Mari-Liis Kurg.
Well, hello from my side. Can you hear me? I think you can. So first of all, I would like to thank you for inviting me to this event. This is my first time to give a speech for the crypto firms. Although I've been training crypto firms, but the speech is the first time. So it's a pleasure. Thank you. So yes, I didn't really know that there is a so challenging topic today, that we are comparing banks versus virtual currencies, but I accept the challenge and let's discuss about it. So yeah, thank you, everybody. So today I'm talking about a little bit background of the compliance function and also perhaps what have gone wrong with the banks. So my goal here, or ultimate goal here, is to discuss how we can actually avoid the same mistakes that banks have made in the past. So a little bit about myself. My name is Mari-Liis, as already told by, I don't know, what was your name? Silvia. Nice to meet you, Silvia. Past 2 years I have lived in Belgium, but mainly I've been working in heavily regulated banking sector, including banks such as SEB Bank, Swedbank, Nordea Bank, and ING Bank, and mainly have been held senior compliance leadership positions. And only recently I have assisting also some crypto firms. Yes, so 14 years experience from the banking sector. That's something. So compliance functions. So perhaps you would like to know what means compliance, right? And what is AML and how to prevent money laundering. So let's start with a compliance function. So I would briefly give you a short background about the compliance. And then first time compliance was actually defined 2000, not even the compliance, but we know banks have been facing risks. So that's not a new term if you're talking about the banks. We have been identified credit risk, liquidity risks in the banks for several hundred years already. But operational risk was only mentioned first time by Basel 2001. And compliance was a part of operational risk. So in other words, legal risk, which was part of non-financial risk, and only 15 years ago. So compliance as a term is a pretty new legal term for the banking or for the financial institutions. So it's not, it has never existed for a long period of time. So this is something what you need to take into account. Many years ago, we didn't know what is a compliance function, and now it holds a central role in the banks. So, and also perhaps for you to understand what contains effective AML program. It contains standards, in other words, policy, procedures, guidances, risk assessments, risk appetite statement, customer life cycle process, in other words, KYC, you need to know your customers, technology, if you also know that this can be support your AML program, and also operational work, in other words, investigations. And for that, in order to comply, you need to hire a compliance officer. And that's also pretty clearly stated in the law. So who is this mysterious person, compliance officer? Or perhaps you also know it with another words, money laundering reporting officer, head of compliance, head of AML. That's the legal term, and if you are running financial institution, that's the obligation by the law that you need to have compliance officer in your firm if you want to operate. So what are the role or obligations for the compliance officer? So he or she obligation is assess or needs to have access to relevant information across all the structural units in the financial institution. Impeccable reputation, also very important, that you may terminate the person contract if he or she has not been acting in a transparent way, let's put it this way. Her duties is to give guidance, provide training, develop and implement effective AML program, direct reporting to the management board. So that's also very important that he or she needs to report directly to the management, to the senior management. And also execute transaction monitoring and sanction screening processes in your firm. And also reporting to authorities. So if she or he or organization, someone detects suspicious activity, that's compliance officer role to also inform authorities that there has been some suspicious behavior or suspicious transactions. So what are her rights? To do supervisory over the organization, monitor the activities of employees and implementing of the different measures in order to mitigate risks in the organization, and also make proposals to the management board. And this person has also civil liability up to 5 million euros. So if she or he does not fulfill into the role or have misbehaved, then she might be facing a civil liability up to 5 million euros. And also with the AML6 directive, it will be added criminal liability up to 4 years imprisonment. Would you like to apply for this role? I know we will be discussing it with you, so I'm looking forward. What are your thoughts about that? So, risk management and lines of defenses in the financial institutions. What is expected? What is expected for the financial institutions in order to mitigate risks or detect risks? You need to set up risk management, governance in other words, and there you need to have 3 levels of defense. First level of defense includes frontline employees, in other words, the people who are servicing customers or who has a direct contact with customers. And this is also a function who owns and manages risks. The second line of defense, that's the function who controls or specializes on risk management and compliance. It can be also legal department under the second line of defense. And normally compliance is also under the second line of defense. and their role is to do supervisory over the first line of defense. And third line of defense is normally internal audit, and that's the function that provides independent assessment, and that's internal audit normally. Also, according to knowledge in the best practices in the market, we also believe that there is also already fourth line of defense, and that's external audit. So in order to comply, you might have all three lines in place, but you still have not confident enough that you are complying, then you might order some external audit to oversee your processes and policies and operational work. And the fifth level of defense is normally supervisory. So in other words, Financial Supervisory Authority or Financial Intelligence Unit. If you're talking about the virtual currencies, Supervisory Authority is at the moment currently Financial Intelligence Unit. So how the money laundering prevention process should look like? As we discussed, there are certain elements which need to be met in order to have this confidentiality that you are complying. So you need to have a policy, and it's actually pretty equal with risk assessment and risk appetite statement, which is set by the senior management, and it actually comes together with business plan. So before conducting any businesses, you are developing business plan, and together with business plan, you also need to set your risk appetite. In other words, you are stating what is your goal, what you want to achieve, and what are the mitigation actions you are taking in order to achieve this goal. But you have to understand it's not only that you need to mitigate the risks, but always if you are taking a risk, if you are conducting a business, you are taking the risks, right? So this is a statement where you need to state, yes, we want to achieve, turnover 100 million euros, but for that we are ready to investigate or to invest also for the risk mitigation actions. And don't get me wrong, that's important to understand that as a private entity, your aim is to earn income, right? So we are not saying that compliance means that you need to mitigate your risks only, or you need to ban your activities, that you should not do the business activities since you need to mitigate risks. Even if you go outside and it's raining, if you go outside, you are taking a risk. You might get killed, you might get wet if it's raining, but if you have umbrella, you can mitigate this risk, right? So this is the way how you are proving to regulator or supervisory authority says, yes, we understand that there is a risk, yeah, but we have thought about it and we have mitigation actions in place. So both of them are very important, policy and risk assessment and risk appetite statement. So what are their processes is know your customer life cycle. This I will discuss a bit more in the next slide. Transaction monitoring and transaction screening. Know your customer contains then data collection, due diligence measures, customer screening against external and internal lists you may have. You may use technology for that. You may outsource this service, but you can't, and that's also very important to understand that you can't outsource the liability. So liability remains to the company, to the firm. Even if you agree with your provider that they're conducting KYC on behalf of you, it's fine. But you have to understand the liability remains with the firm. Transaction monitoring, it's also expected to do in live. And particularly for high-risk customers. So if you are detecting that your customers are imposing higher risk, then you need to prove that you are actually taking some additional measures to mitigate that risk. Regulator is not saying that you can't service high-risk customer, but they want to see what you do more or how you are mitigating this risk. And actually, I would even add here that it's not even saying that you understand the risks, but perhaps that you well, yeah, that you understand what are the risks, and if you understand what are the risks, you know how to mitigate those risks too. Perhaps you all have heard risk-based approach versus rule-based approach. Today we are acting in an environment where we are expected to use risk-based approach, which is completely different by risk or rule-based approach, which has a, which, in other words, if the law states exact rules what you need to do, or what are the prohibited actions. But now we are free to conduct our businesses as we want, and in order to conduct businesses, we are willing to take some risks, and if we are willing to take some risks, we also have to understand that for some risks, we need to mitigate those risks. But in my personal opinion, we have failed with a risk-based approach. And we should actually go 3 steps back and actually ask regulator to clarify a bit more what is allowed and what is prohibited and what is not prohibited. Because I think even banks, they don't really, I mean, they really want to have more clearer guidance at these days. Think about the kids. I mean, if they are under 18, would we actually allow them to buy alcohol and expect that they have their own self-assessment and they would understand that they don't need to buy alcohol? Or we say it strictly that, okay, let's agree that if the kids are under 18, we are not allowing them to buy alcohol. So I think that's also with the risk-based and the rule-based approach, that for some things we need clear rules. What is allowed and what is not allowed, what is prohibited, what is not prohibited. Because if you are having this risk-based approach, it's a lot of confusion. And I've seen it so many times that the financial institutions, they tend to seek some sort of better guidance in order to understand what direction to take. Transaction screening also. If you're conducting your transactions, you need to screen them against sanction lists. That's mainly related to sanctions, which we also have obliged to detect, or sanction breaches we are obliged to detect. And this all, know your customer, transaction monitoring, transaction screening, gives the input for the risk assessment and policy. Okay, so how to implement the KYC? Know your customer. Mainly, you outsource this service, but I mean, you're not. It's not requested by the law that, or required by the law that you need to outsource this service. So just to simplify a little bit how to conduct KYC or customer due diligence processes, you need to assess. So whether if you have a customer, you ask some questions. Who is this customer? Whether the customer is a legal person or private person. What is his business activity? What services, products the customer is going to use? What channel we used in order to onboard this customer? Whether we met this customer face-to-face or was it non-face-to-face? And what is the country-related risk with this particular customer? So whether the customer is from high-risk country, whether he's transacting with high-risk country, whether he was born in high-risk country, whether the customer is paying taxes, or the transaction parties are in high-risk country. So this is something what you can actually use as an indicator for assessing your customer risk. It doesn't particularly mean that customer is high risk when he's from a high-risk country, but it may have an indicator, or it can be red flag. So once you have this data, so based on the data, you can assess whether the customer is low risk, medium, or high risk. And what is expected by the law is that you are conducting, based on the customer risk level, you are conducting the risk or transaction monitoring by using risk-based approach. So you're not applying the same measures for all the customers, you're applying measures accordingly, right? So if you have a high-risk customer, you might check them more. You might conduct perhaps due diligence more oftenly. You want to see he or she transactions more oftenly. or you might want to ask additional information from the particular customer. And then also, you need to update customer information time to time, and perhaps apply enhanced due diligence if it's needed. And there's also that if you're detecting suspicious activity, then you need to report it to authorities. And the authority is Financial Intelligence Unit for Estonia. And if there is no activities, then you just conduct normal transaction monitoring. So regulation. I'm a lawyer by degree, so I'm really enjoying navigating in a legal environment, and it's actually pretty complex if it comes to money laundering. There are a lot of different regulations. I'm not going into deep depth into the regulative side, but just to give you some content here or concept that there are different regulations when it comes to financial institutions. So there is a Wolfsberg Group who is actually setting standards. It's a non-profitable organization which includes 13 banks, and these 13 banks are giving the input for the FAT 40 recommendations, which I hope you have heard what it is. FAT actually gives input to AML directives. Perhaps you have heard AML 4th directive, 5th directive, 6th directive, which normally are implemented into the local regulations, AML laws, acts. There you might have also supervisory guidance, which is actually also made based on the AML acts. And then you have a bank policy, regulations, or financial institutions standards, policies, and employees' guidelines. So there are 6 different directives so far for AML, which are regulating AML part. First one was established 10th of June 1991. So if we're talking about money laundering prevention, then it didn't happen. It didn't start 5 years ago. The requirement was there already it was implemented into the local laws in 1993. Yes, we need to take into account that Estonia became a member of European Union only 2004, but we actually, our first AML law was implemented 1999. Second one, I'm not going into the details, so if you want you can read about it, but just to give you a bit overview. That second directive came 10 years later. Third one, 4 years later. Fourth one, 10 years. There was a gap 10 years. And what was important part here was the fines, right? Fine up to 10 millions of the annual turnover. And I think that was the reason why all the banking sector started to pay attention on AML prevention or money laundering prevention. And we started to talk about KYC, AML, the terms which were not publicly known 15 years ago. And then the next one was 3 years later, and then there was also a gap only 6 months. And I think for the cryptocurrencies, that was the most important part. Estonia was a very active, proactive, and together with implementing a 4th directive, we also managed to add crypto firms under the AML 4th directive. I mean, if we were taking over the AML 4th directive, we managed, because due to EU presidency, we were late of implementing AML 4th directive, and by the time we implemented it, we also managed to add crypto firms under the local law. And with that step taken, we were first to regulate crypto virtual currencies in Estonia, in Europe actually, in wider. And this one is not taken over yet, so we are implementing the 6th directive by the 3rd of July 2021. So financial crime. So that's why we are here. Yeah. We are preventing financial crime. One of the financial crimes is money laundering. And under the money laundering, we have a predicate offenses, right? So we have a predicate offense which needs to be proved in order to cause anyone for money laundering, accuse anyone for money laundering. There needs to be predicate crime. And for the predicate crime, it can be cybercrime, it can be tax evasion, different predicate offenses. And it's also now regulated with the 6th directive, which predicate offenses are falling under the definition of predicate offense. Yeah, eelkuritegu. Yeah, yes, eelkuritegu. I heard you. The stages of money laundering. So we have a first stage, that's a placement. That's the stage when assets are directly derived from illegal activities. And then there is a second stage, which is called layering. And this is a stage which is known for the financial institutions, that there are multiple transactions within the different financial institutions. And the aim is to disguise the origin of the property by carrying out a series of financial transactions. And there's a third stage, which is integration. And there we actually can see that that's the final stage of money laundering and turning which the illegal funds are integrated into the economic and financial systems. So what is actually expected? What is expected from, oh, sorry? No, I think I turned it off. Oh, sorry. God, sorry. So what is actually expected? So what is expected for financial institutions? How we can actually prevent money laundering? So financial institutions are not obliged by the law to detect money laundering or underlying crimes, but they need to apply due diligence measures and refuse a customer relationship or transaction in case of suspicion of money laundering or an unusual transaction. In other words, you are not detecting predicate crimes. I mean, you are detecting unusual behavior. We are not in the position to assess whether this was a crime or not. We are only detecting that that is unusual behavior, or unusual or suspicious behavior. We are not in the position to understand whether this was a money laundering or not. And also, what is important to understand, that financial institution may be guilty of non-implementation of due diligence measures, even if the money laundering itself, including the underlying crime, is never identified by the court, right? Therefore, if financial institution does not understand the content of the transaction or origin of the assets, or cannot identify the actual beneficial owners, they may not onboard such customers and execute the transactions until certain information has been obtained. So that's also very important to understand, that the fine might be imposed even if you haven't, even court never identifies that there was a criminal activity involved. So some case studies. I'm not going into all of the cases which I've known in the world, but you have heard different cases perhaps that banks have been imposed fines. Estonia is pretty famous by Danske Bank and Swedbank cases. According to my knowledge or my experience, whenever I'm talking to my international colleagues, they know Estonia. And they know Estonia because of the Danske Bank scandal or Swedbank. And if you think about it, what are the consequences if you're not complying? Are they fair? I'm not sure. Swedbank share, I think, dropped 25% after the money laundering issues were identified. So there was no money laundering. I mean, there was not detected money laundering, but the share dropped 25%. Yeah, by now there is a fine also imposed by the Swedish regulator, 400,000 euros. So what are the lessons which we can learn from the banks? So what banks have done wrong so far? And here is the message that I believe that we are moving, I mean, that the payments are moving from banks, or they moved from the banks to the payment service providers, and now they're moving from payment service providers to the virtual platforms or blockchain. And I think it's something that is called innovation, so it's a natural and then the way to go, right? That's the innovative way to go. But I think it's important to understand that we should not repeat the same mistakes banks did. So I just express perhaps some of the mistakes banks have done recently. So what went wrong with the banks? According to different audit or reports which I have read, there are some similarities in different financial institutions. So what regulator has been pointing out is that banks have lacked governance, standards, deviation analysis, escalation processes. They have lacked training and how to report to authorities. There have been insufficient know your customer processes and not enough information collected on behalf of the customers. Lack of overview and thorough understanding of foreign language documentations. Inability to perform adequate risk assessment of high network individuals. Risk assessment methodology. Ignoring red flags or high risk indicators. Lack of understanding of source of wealth and source of funds. Hiring of knowledgeable and experienced personnel to fill critical roles. Failing to screen customers against sanction lists and PEP lists. Ability to find connection links, smarter rules for payment monitoring, and keeping an audit trail. As I mentioned, I have worked in ING Bank, so I think it's crucial to mention that ING Bank received the biggest fine which was imposed by EU regulator, and it was 800 million euros. And 100 million euros was only imposed due to the fact that they didn't hire staff to fill critical roles. So they saved some money during the 5 years period, and they retrospectively paid it back to the regulator. So yeah, my message is here that don't repeat the same mistakes what banks have been doing. So thank you from my side. It was a pleasure to give you a discussion.
If anyone has any questions for Mari-Liis, then you can raise your hand and I can come here and give you the microphone.
Thank you for the presentation. So my first first question, since you also been experiencing banks and you have worked in banks, but new users that are in cryptos, they actually want anonymity. So that's kind of a a strange situation. The customer wants anonymity, but banks want more and more documents. How this will work out?
Well, according to my knowledge, if you have heard the term bank secrecy,
Yes.
I think banks have been facing it also, that they, at some certain point, banks also ensure that there is anonymity for the customers, but it has changed within the past years. So yes, I understand that for this particular business type, it's acceptable at this point of this point of time, but I really believe that the regulation will kill at some point of time this anonymity. So you either comply or die, and I think that's the future.
Thank you.
You're welcome.
Yes.
Okay. Thank you as well. Quick question. The regulation gets more and more strict. Is it backward, also working backward? I mean, next year it will be more penalties for violating. I saw this directive is coming 2021. So if it's crime is happening today or had happened yesterday and still processing, is it backwards? Is it working backwards as well?
That there are more regulations.
I mean, if it's crime is today and going to in the process investigation, exactly.
No, they
Exactly,
can't.
yeah.
No, I mean, if the directive is not in place, of course, retrospectively can't apply it. But since the directive is in place since 2000, or local laws are in place since 2017, then of course, if the regulator comes in and they start their supervisory, then it's too late. I mean, everything what is there is there, and then they can impose you a fine. Yep.
Hi,
Hello.
I have one, I'm Marko. I have one remark, one joke, and one question.
Okay, good.
Let's start with a joke.
Let's talk to the joke.
In Estonia, it's like a spell game actually. In Estonia we call them as risk leaders, or in English it's risk manager who work in a bank, yes. So in Estonia we call them as leaders, but they don't risk and they don't lead. So they are like disturbing the bank. This is a joke, yes, thank you. And
Oh, I think it's not a joke. In fact, I believe that's the way. The banks are de-risking right now, and this is not the aim of the risk-based approach. So it is a joke, but I believe that's pretty much how the situation is in the banks. That the lawyers and the risk manager are leading the banks, which is not the aim of the risk-based approach.
then the question was about your slide about screening. That you mentioned AML screening, like sanctions and so on, but you skipped the PEP, like politically exposed person. Was it on purpose, or did it?
No.
Was it?
So I think I mentioned that you need to screen against internal and external lists. So I'm not saying only sanction. You may want to screen against negative media. You might have some internal blacklist that you have identify some customers who you are not willing to service. So let's not put it that they are international sanction list, but you may screen against different lists.
Okay.
PEP list, yes, you are required to identify whether the customer is PEP or not. And also here is important to understand that you need to ask from your customer whether the customer is PEP or not, and then verify it.
If we take Estonian laws, which was changed a year ago, then by Estonian law you can't rely on that whether the client told you or not. You have to double check it anyway.
Cross-check it.
Yes,
And that's
yes,
I think that also the AML law actually changed in July 2020.
Yes, probably.
And then there is a clear statement made that you need to cross-check it. So even if the customer says you something, that he or she is a PEP or not, or who is the beneficial owner, ultimate beneficial owner, then this is something what you are required to double-check.
Okay, now here's a commercial. We have a tool online called PEP Checker. It's made in Estonia. Go and check it out. It's really easy to implement, and you can just put your credit card on it.
Thank you, I will.
and now a remark. You had a slide also about why did this money laundering happened. And you pointed out many, many reasons which you have studied probably deeper than I have. But I think you skipped one of the most crucial ones.
Okay.
They earn shitload of money from it. And it is the same with products that we are building in crypto or wherever. If we have a chance or a chance to earn money, we will use it. And this is the crucial part why it happened actually.
So the people who are in charge, they are more interested of
Making money.
Making money
And then
not
and then there's a regulator who told, okay, this was wrong. Let's change laws and let's put higher regulations and so on. But it was money at first, and then was and the slide was reasons why it why it happened was the money, but these was the tools that were used inside the bank, and these are the tools that will be used in crypto or other areas also. That's
I believe that you have more knowledge here than I have.
no, definitely not. Okay, thanks, Simon.
Thank you.
Anyone else? Any questions? Okay, thank you very much, Mari-Liis. Let's make her
Thank you.
applause. And next we will have Oliver Steinert, who will come to speak. And yeah, let's welcome him.
Hello? Is it okay? I'm Oliver. I'm from Change Invest, and I'm the compliance officer and the money laundering officer, as in MLRO. Alrighty, let's sit down or?
Take a seat. Thank you.
Closer.
Shall I have a beer? I'm gonna drink water. It's okay.
Maybe after. P2P beer. Alrighty.
So, if I may ask one question from you. So what are you seeing as the main concerns for the crypto firms who are operating now in Estonia?
Maybe the Estonian crypto environment is completely different than the overall crypto environment because I have stressed this many times before that due to adopting the 5th AML directive too early, before any of the other governments in the EU, Estonia opened itself up to new risks. Risks that nobody could anticipate, and the regulator nor the supervisory authority, as in the Estonian FYU, could work with. They didn't have the resources, they didn't have the knowledge, they didn't have the time to really assess the service providers which were applying for licenses. They didn't have the tools nor the rights to actually decline issuing the licenses as they do now. Actually, most of the companies that were created and who applied licenses for weren't actually companies who were in the crypto business or who had an intent to create a crypto business, especially a legitimate one. Their goal, or at least most of them, the goal was to create shelf companies in order to resell them later for profit, because they already had licensed companies. So let's say the risks in the Estonian cryptosphere and the overall cryptosphere are a bit different. However, I would say that there are two major risks. Firstly, as you pointed out, the term KYC. Basically, I would say that everybody in the crypto sector thinks that KYC means identity verification. As in, you provide the document, you provide your selfie, and you are KYC'd. No, friends, that's not KYC. Let's say from a specialist perspective, I wouldn't say that identity verification is even a part of KYC, although it is, like legally, but it's like so obvious obligation that I wouldn't call it as KYC. What's KYC? It's really understanding who your customer is. Yes, you have to screen their transactions. Yes, you have to monitor their transactions. But mainly, you have to verify whether the transactions that the specific customer is making are inherent to such a person. And basically, that's it. And also, whether, we say identifying the source of funds. Yes, you don't identify the source of the specific funds, usually, used in a transaction, especially for crypto transaction. You have everything on blockchain. You know the origin or the source of the specific bitcoins, maybe 100 hops down the road. But your goal is to identify and verify that the sources or the funds have a legitimate origin, as in you identify the customer's source of wealth. Simply put, you identify whether this type of customer with, let's say, this type of salary might have had the chance to accumulate this much funds, especially to put that kind of money into cryptos. And let's say, ultimately, that's your goal.
I agree.
And the second problem, I would say, is, the anonymity. I am also from a bank. And when the fourth money laundering directive was adopted, or member states had to adopt it, there weren't many customers who were used to such requests from their bank. Everybody was furious. Like, why are you asking me this much questions, that kind of information, that kind of documents? I have never had to provide such kind of documents, and I have been your client for two decades. Everybody was frustrated. Now everybody knows that their bank might, from time to time, ask something. I think it's kind of the same thing in cryptos. Sorry. People aren't yet used to this kind of behavior, but in a couple of years, maybe they are. I hope they are. But the thing is not to suppress your customers. We don't want to harass the customers nor block the business. Ultimately, as I said before, the goal is to just identify, in accordance with the risk-based approach, that your customer is not a bad guy and the funds are not of illicit origin. And basically, that's it. Maybe another point is that you have already provided some type of company which most of the people in the world have not heard of. There's not much information about the company on the website. Maybe even the company is registered in the Cayman Islands. I don't know. You have provided them your ID. You have provided them your money. But you're not going to provide them, let's say, your payslip, because that's too much. Is it really? I don't think it is. Yeah. You don't?
I'm actually very positively surprised and impressed that I expected that the level of knowledge in virtual currency firms are slightly lower. So I'm impressed. Thank you.
I would say that really depends on the company.
Yeah.
Because we have many service providers who don't care about the requirements or who do not know about the requirements. But also we have many service providers who actually care about them. And when you do not know the requirements or you don't care about them, probably your goal isn't sustainability.
Mm-hmm. Yep.
Like from a business perspective, it's more reasonable to have a sustainable business that grows over time, rather have a very, let's say, effective and maybe beneficial short-term business. I would say sustainability is always better.
Yep,
And,
and long-term, to have a long-term plan in place.
Exactly. And when you strive for, let's say, not perfection, that's impossible. When you strive to comply with the requirements, your reputation is also better. And in the end, having a good reputation brings you more customers. As before, we were talking about Danske, we were talking about Swedbank. We cannot say that these companies don't do anything. That they whistle to the requirements, no. But due to, say, some false and some negative media coverage, how much reputation have these companies lost? That's massive. And not only reputation, but also share prices.
I come back to that, why I don't agree with you.
Yeah.
I just tried to make myself a first offshore new digital bank account. Okay, it sounds sketchy, but it was interesting for me. It was a small island called Dominica, and they are providing like offshore bank accounts. Okay, it's really nice. And now they ask me, please upload your documents and so on. And if you do it, I don't know, if you know something about technology, if you upload it, then you're just giving your data to some random server hoster. And
yes.
And this is where I'm not actually comfortable. And if we are talking about scaling new alternative products, there are thousands of different companies who ask this kind of data. And I'm not sure if I'm willing to hand out this data, even if there are startups and so on and so on. And if you're an old bank like Swedbank or Danske who laundered shitload of money because they earned money, also even more probably than lost. But this is the security that they provide me. If I send them my information, it will probably not be leaked. After I made this account and I provided them and I uploaded my documents, I don't know what happened, but they haven't answered me for a week, and I feel quite disturbed that they are not probably the only one. And this is the crucial part of uploading this data, that with the old market player, it's okay. With the new ones, even as change, I'm not that comfortable.
I totally agree with you in that point. But we have to differentiate the good players from the bad players, as in the exit scammers, the scams in general, or let's say these kind of entities that on purpose register in places like Dominica, for example, in the case of change. Yes, we do our best to provide to provide security to our customers, to be as trustworthy as possible. You can trust us more, especially, for example, we have GDPR. Yeah, but probably everybody knows what is the GDPR, and yeah, exactly. But if you have read the, let's say, Estonian laws, it's pretty hard to provide services outside of Estonia.
But I actually agree.
Yes.
You have to mention legitimate solutions. Everybody can scam you offshore. It's known.
Absolutely.
Malta, Cyprus, Dominique, as you said, it's you're risking your money. Instead, when you come to Europe, you have N26, you have dirhams, you have Mr. Tango in Latvia. You have all those possibilities, and they are actually accustomed by the current law of the design region. So people know. People do know.
Yeah, that's why it's very important to do your homework before creating a new account at a service provider. You have to ensure that it's trustworthy and you don't lose your funds nor your data.
Yeah, and I think it's very important to mention here the data part that that you are actually providing your ID documentation, your credit card, your data, your documentation, and you never know how this will be used, right? So it's not only money laundering risk what you're facing, but one day there might be theft of identity. We don't know. So yes, as you said, do your homework before providing any of the data. And I completely agree here that you really need to, that is a risk, a different risk. You don't know that what happens in few years' time, the data.
Of course.
Hello, I have another question. How do you see the trend of the anti-money laundering? Does it goes more into the punishment or to the prevention side in the future?
I personally believe and want to hope that we will be seeing clearer guidance set by the regulators and supervisory authorities. I believe, as I already stated, that we have failed to adopt risk-based approach. So if we want to really prevent money laundering, then we need stricter and clearer rules, and also cooperation between the private sector and the public sector. Because right now, I think that all the regulative part is 4 or 5 years behind the real situation. So if you think about law drafting process, it takes several years before it will be implemented on the guidances, on the financial institutions guidances level. Yes, one option is that the regulator or supervisory authorities or criminal investigation authorities, they actually start to take actions. And if financial institutions are reporting those suspicious transactions, they are taking actions. Because right now, I have a feeling that, or impression and also experience, that you might report, and there is no actions taken. It's like a black hole, you're reporting and nothing comes out of it. Of course, you need to have a criminal offense proved, so you need evidences in order to go to the court, and that's, we are lacking here. Criminal investigation as a process is a burden for the state, and we are lacking regulation which is adaptable for preventing crime. So one option is to adopt unexplained wealth order, which has also failed in UK, but they actually tried to turn it around, the criminal investigation process that might be one of the options what you may consider on a state level. Also, there might be, instead of having directives, which will be implemented into the local laws, and it takes 2 or 3 years to consider regulation, which are become enforceable straight away, or become enforced straight away. So there are some actions also what needs to be taken on the state level. I completely disagree here that you can actually blame only financial institutions. And cooperation is a key word here. That the state should consider, perhaps also, how to use blockchain. Not knowing all the benefits about the blockchain, but I believe that this is innovative way how you can actually, there is an audit trail always available for the transactions. So I think state needs to consider, not even only one state, but on EU level, they need to consider how to engage the top experts from the market to advise them. And only if we cooperate and collaborate, then we can prevent the crime. And not only country level, but on EU level, on the world level.
I have another question though. We see all this buzz around like crypto and the sphere and all money laundering, but at the same time you have like ASB, Deutsche Bank, like news coming out that they're like laundering like mass amounts of money, of wealthy people's money, of terrorists' money, of like dirty killers' money. So why do we feel that
Double standards.
directives that are set in place would help money laundering to prevent money laundering in crypto, but they are not working in the fiat industry at the moment?
Mm-hmm.
So my question is like, why do we think that the current rules could possibly work if they're not even working right now?
And I'm actually saying here that I believe that we have failed implementing risk-based approach.
Oh, no, that's true. That's true.
And also, yeah, I don't, yeah, perhaps you want to add something here, but I believe that financial institutions have failed. And I think that's a crucial part here, that to not to repeat the same mistakes what have made by the banks. Be smarter. I mean, we have a lessons learned.
Anyway, let's do it this way. You will share one microphone, and this microphone will be shared with the crowd. Otherwise, people behind the internet screen, they just hear nothing, only answers, and then they guess, what did they ask?
I think the whole discussion is quite wrongly made, actually. That if you take the regulations and regulators and the guys who would like to wash money or do money laundering, and you think about the amount of people who are doing the regulations, and you think about the capital that they have, then you probably will understand that they are always one step behind. A lot more. That if you take like Estonian tax office, there are like 500 people working that how to get taxes. There are 50,000 people every day thinking about how to not to pay taxes. And the same amount goes even bigger and bigger if we're talking about financial crime. So I don't know, where would it all lead us? Like eventually, after 10 years, I have to send my employer confirmation letter every time that yes, I got some salary last month, that's why I'm spending the money, or where do you see it, where it ends? At the end, there are many brilliant people who are not interested to pay taxes and to do money laundering and so on. And then there is like how good are the services that you use and which information you have to provide. Do you get like a seamless service and so on? And I can't see a really good answer on that time. Boom.
Well, I also believe that there can be great improvements when it comes to governance side. So I believe that today, state, in my understanding, they should remove some layers. And instead of owning, let's say, if you think about how accommodation, hospitality business is running or working, you don't particularly need to own apartments, but you can actually rent out your apartment using Airbnb or any other tools. So I believe that state also needs to adapt with a new reality, that they need to use digitalization, they need to remove some layers, they don't need to own that much, they need to make all the state governance more transparent. And then, and only then, and also perhaps our tax rate today is too high. And we need to consider whether we can actually, whether this is fair, that we have 500 people who are working against tax evasion and 50,000 people who are working every day in order to find the ways how to avoid paying taxes. So I can see that you want to say something.
Maybe one more addition. Before, you said that the risk-based approach has failed, especially the guidances on the risk-based approach. And I totally agree with that, because sometimes you still feel that everything is still rule-based, although they should not be. So my wish is that, let's say, the rules became less stricter, and the market participants themselves had the chance to interpret the rules themselves, as in really apply the risk-based approach.
But this requires that you really understand the AML processes. So I also, if you see it from the helicopter view, and if you have this helicopter view, then I completely agree that risk-based approach is something what can actually be very beneficial. But I haven't seen that so often that people actually understand how to adopt risk-based approach. Many times you hear management board to say that, okay, ask how we need to do. Please verify whether this is something what we can do or not. We can't do that. And financial institutions, they tend to want to have a strict and clear guidance. Is it allowed or not? And here, perhaps, I don't know, we as a market participants can help state and show them guidance how this market needs to be ruled, or how we can actually prevent money laundering by using all the knowledge and tools what we have available at the moment.
Question here. Dear panelists, you mentioned the trust issue with providing your data as a company to a financial service provider who does a KYC on you. So my question is about, what is your standpoint, what is your view, maybe even personal, on companies that offer the service professionally, such as KYB, KYC providers, even represented here in Estonia by certain companies? Yes. So if these companies start to bloom and people start trusting them, how do you see this future? Do they really have a chance of succeeding, or is it still better that every single company, big or small, has their own compliance department and they do all the KYB themselves? What's your standpoint? Thank you.
So the question is that whether is it okay to outsource the KYC functionality? I mean, from my perspective, it's completely fine. It's not the KYC only what is outsourced. We are seeing more and more that transaction monitoring services are outsourced to other companies, and that's completely fine. But you need to understand that liability cannot be outsourced. So as long as you do your due diligence, you assess the risks that this is acceptable for you, you understand what they're doing with the data, as long as you have a contract and you are trusting your partners, I can't see that any specific concerns, especially if you are operating under the same legal environment. In other words, in Estonia. But think about if it's Singapore or if it's Malaysia or any of the third world countries, then perhaps the problems start to occur because we don't know who are their customers and how they are using your data.
Okay.
And also I think it's very important that we are seeing it more often now that there is a need to have a clear link with country where the license have been issued and why we are doing it. Why, right? So we understand that we can actually operate internationally. So why do we need to have an office in Estonia if we have a license here? But that's also, if you think about it, that if you have customers from Nigeria, you have a license from Estonia, you have an office in Riga, you have ultimate beneficial owner from Russia, you have platform which is established from Belarus, and now who needs to conduct the supervisory? The country where you have a license from, right? So it's Estonia, if you have a license from Estonia. So all the Estonia, I mean, how they conducting the supervisory if you are in Riga? So that's why they're requiring you that if you want to operate, if you're licensed here or registered your business activity here, then they can actually come and they can ask questions. So that's their obligation to do that. It's not whether they want to do it or not, but that's they are obliged by the law to do that. So if you have all this, and also if you think about that, if there are some crimes committed, that how can you collect the evidences if there are transactions or customers from Nigeria? So that's very interesting, and how to overcome this part. And how, I mean, of course, we don't want to have this link with Estonia, but I think also that from the regulative perspective or supervisory perspective, that's important that you can actually go and visit and see and ensure that there is legit business behind it.
Of course, that's understandable. Thank you for your long and detailed answer. Let me just continue. Let's assume that I'm a business that offers financial services, and I do need to KYB my customers in the future when I start accepting them. Now, if there are companies that do this professionally, and they also want to, as their business model, establish a centralized database among a number of countries. On a side note, an idea we had 2017 before PSD2 even. So how viable is that business model? Do you think they will achieve the status of a centralized authority that governments accept information from. That I'm a company, I gave my customers information to this company. They checked it, and then my regulator says, okay, we believe you. The liability is with me, of course, understandable. But these people, this company that confirms a source of funds of my customers, checks that all due diligence checks out, everything's cool. Now, how viable is their business model to become big and service multiple countries at once? Marco?
Just a small remark. Think about Thomson Reuters. They're fucking huge. And still, if you get the data from them, and the shit hits the fan, the government will never trust Thomson Reuters. They will only trust you. And you're paying a lot of money for Thomson Reuters. I think it was 100K implementation fee at first, and then 20 euros per every check. But you're still a responsibility, and I can't see it, that any government in the world would say that, yes, this small company is not okay, but Thomson Reuters is okay. It's only your concern.
You as a small company still have the final say. Do I accept this
Yes,
or not?
yes, yes.
From my perspective, you're free to collaborate. And also we have seen those initiatives that banks are catering together, they're trying to implement some similar measures for their customers or for the different customers. But the important part is that the liability remains with the financial institution. So it's all relies on the trust. So I think you wanted to add something, right?
Yeah, thank you. From efficiency standpoint, I believe that outsourcing as much as possible is very useful. It's cost beneficient, and especially if you have these kind of big companies that have the most data, the accuracy of the data is better. However, the screening and the monitoring measures must be stipulated by the financial entity, as in the parameters must be provided by the obliged entity. Otherwise, how can that obliged entity adhere to its own risk appetite and risk assessments?
Question for you. So we have, perhaps a few years ago, Estonia, or during the few past years, Estonia has issued or Estonia Financial Intelligence Unit have issued 3,000 licenses for 1,300 different firms, right? So we have learned our lessons. So do you think that we have some knowledge here, what we can actually share with with different countries in Europe? That we as Estonians are on the grade 3, and the other members of states in European Union level, they are actually going to school at these days. So what are your thoughts about it?
As I said before, I think the best learning here is not to be too eager to adopt directives, especially if a country as small as Estonia does it, because you have such large countries in the EU whom to learn from. Germany, France, Spain. It's not reasonable to. I think that there isn't actually much to learn, because the situation we were in is unique. We haven't had such situations, at least in my lifetime. Also, maybe what's to learn is that in order to really regulate specific obliged entities, you have to have people who understand the business and who understand the specific sector. Because I know when cryptos in Estonia became regulated, the supervisory just didn't have the knowledge. they are working on it hard. And I think their knowledge and their expertise has grown significantly. And for example, I think that's also one of the reasons why, as of the beginning of August, there were a bit more than 600 licenses left. We used to have more than 3K. Alrighty, okay. I remember the last stats from August. Yep. Yeah. Alrighty, I think that's it from our side. Thank you.
Thank you, thank you, thank you. There is one last question. I will come with the mic.
I have a question. Is there anybody who likes these procedures?
Only lawyers.
That we have now polluted our environment. This anti-money laundering, KYC. Is there anybody here who likes this?
Shall we have a voting?
Yeah. But does anybody like it? Because if nobody likes it, I don't see future in this.
Thank you really much for asking it, because I was recently also thinking myself that, the pleasure lies in not complying with rules, right? And usually you get your memories out of it. So what I'm trying to say maybe is that why don't we change the conversation, right? Why don't we say that maybe laundering money is cool, but then we redefine, because if the pattern shows that, people do it anyway. So what I'm trying maybe to say is that we can also help the regulators to change the question they're asking, or what we are asking, right? The core one. And I hope that this discussion is exactly for that, where we go crazy and we don't explain how we comply, because yes, you said someone knows, someone don't know, but I also have issues with trust for sure. But so there's so many topics, to talk about, and maybe my point is that it would be nice indeed maybe to have a vote just to see if we like it or not, and build up on that, the discussion.
Yeah, but the question is not to like it or not.
But no, what I maybe want to say is that you can build up the critical mass upon your likes or not, right?
Yes. Do we like paid access or not?
I have to say just that I don't love all of these rules, because I have a very nice experience from Estonia, from one of the Estonian banks, where during the compliance of the certain deal, one side was the client of the same bank. On another side, the seller was the bank, but not in Estonia. He was selling the bankruptcy stuff. And as I was a mediator on this deal, the bank, Estonian bank, asked from me to make compliance of this bank who is outside of Estonia. And they're checking their own client, who is behind their own client, who was a buyer. When I said that it's pretty stupid, they closed my account in this bank.
And that's called de-risking, right? So in order to avoid risks, we just ban the risks. Any further questions? I think that we can't answer whether we like it or not. It's the same whether we like to pay taxes or not. If you go to Middle East and ask, do you want to pay taxes 20%? What do you think what they would say? Yes.
Nobody hears you in the internet if you are speaking without microphone.
But I agree that we need to initiate those talks with the government, and to promote that, okay, perhaps the old way of thinking is not efficient any longer, and we need to change that or address our concern that we are not paying taxes.
I think it is much about this, as you said, that the banks get fined if they don't initiate the risk assessment procedures, for example, whether there is a money laundering or not. It's just a burden for the 99.99% of the population. In every way, it is more expensive than the money laundering effect on the thing. It is just, I don't see it being efficient in this way. It's my opinion.
Yes, now also, if you think about it, why terrorist finance, the person who wants to invest in the terrorist financing should do the transactions via the banks.
Somebody is a freedom fighter.
So there are so many ways how you can actually do your transactions.
I think that as crypto companies, we are way better suited to actually detect money laundering than banks. I agree. Yeah, exactly. Because we have blockchains, which are publicly accessible. We have Chainalysis, other softwares, Parsec, Estonian company. Banks, they only know the payee and the payer. We might know the origin of the specific Bitcoin, Ethereum, doesn't matter, let's say 100 hops, 200 hops. We know where is it coming from, and we know where is it going. We know exactly when it's going to hit a darknet market, which one, doesn't matter. Banks don't know that. That's why I think crypto companies are way better suited to really tackle money laundering, to identify the suspicious transactions, and to actually adhere to the risk-based approach, as in apply resources there where it's necessary. You don't have to contact your customers about every Coinbase transaction, obviously, right? But you should contact your customer if they transact with darknets, especially if funds originate from darknets. But from Coinbase, nobody would.
Excuse me? No, the one other thing I was going to say in regards to his inquiry was, I mean, I think, too, the government, I mean, they obviously need some kind of work. They have to be kind of busy in some ways. So, I mean, of course, for them to, stay busy with something, it definitely helps to have, these more, crypto criminals, we might say, if that makes sense.
Yes, obviously the requirements are too strict, or at least they are too burdensome for the everyday people. However, at least right now, they haven't come up with a better solution to really identify the bad actors. If there were better solutions, then obviously every service provider would apply it because it's better for the business and less work for the compliance department, obviously. That's why I also think that it's crucial that the market participants had more saying within the cooperation between the supervisors. Because right now, crypto companies they are new, they are unique, they don't have a lot of saying, let's say, as banks do. And that's why I think that they should also be invited to the table.
I completely agree that we should actually use all the benefits what blockchains provide to our governments, right? So we can actually learn from the innovation, right? Any further questions? Ask Mari-Liis then.
I just had a thought. It's not really a question. I figure we have Bitcoin, we have cryptocurrency, we have a peer-to-peer money with no middlemen. We don't need governments. We don't need companies. We need companies right now because we need a gateway into the traditional banking world. But that's it. Once we move into cryptos completely, then the need for taxes, governments, and these middlemen they disappear. That was just idea.
I want to shut up actually. Come on, I watched yesterday a documentary about history about Cuba in Kumu for free, and there is a Venezuela going on. The money laundering is needed. Question is who is why and when, and who is in power. That's it. That question is the laws is where you are, who is to play. Other side is a jungle, which is complete freedom. So just comment.
Yeah, I believe that I a little bit agree with your idea or the thought. But also, if we have children and they go to school, we have retired people who government needs to look after. So it's okay to understand. I mean, you don't need a government, but perhaps one day you might need a government, or your parents or your children need a government. So I think this is something what we need to think proportionally, that we need to invest a little bit into the government. But what is the proportional part here? This is a question mark, I would say. So completely out, I mean, as a state we can't function. We still need lights on the streets, we need the schools, we need kindergartens for our children, we need healthcare, right? Someone who looks after our grandparents if they are old. That's the question, and I think that's a different discussion. But I agree that we are living in the changing environment.
We have Bitcoin to get rid of the middlemen, but once again we have people trying to wiggle their way into being a middleman. That's just what I see right now. Yeah. But we need that right now, because only like 2% of people own Bitcoin and cryptos. So,
but the question is, my question is that do you need a license to operate on the blockchain?
I don't need anything to operate on the blockchain.
So, exactly, I think it's functioning even without license.
Yeah,
right?
we just need mass adoption, really. And once mass adoption picks up, that's when we can start to get rid of the middlemen.
And these consequences, I think governments and regulators, they don't realize that what are the consequences here. That if it's a mass adoption, then what are the consequences? And I'm also concerned that even if the licenses will be revoked, I mean, it won't stop the activity, right? I mean,
yeah, just my concern isn't money laundering.
I understand.
To me, you might as well call it not tax evasion, but extortion avoidance.
I don't know whether you want to display your face on the screen. I recommend that.
Just wanted to ask you. You can let us know your remark.
Sorry for being Captain Obvious here, but a lot of people want to be the intermediary because the intermediary always gets a share of the pie. So if the payee and the payer are legal people, well, as in they're okay people, the intermediary also has to be checked that he doesn't do anything illegal. So it's pretty understandable what regulators want to achieve. They want to cut down the ability of bad people to transfer money for bad causes, right? And not to pay taxes. So I guess their wish is big, their potential is big, but they're still lacking the, technical and knowledge, finesse to do it right and fast. So yeah, we have to help them. That's my opinion. Thank you.
Here I actually agree. We are in a position that we can actually help them.
Absolutely. And not only can we help them, but we are forced to do that by the regulations we are forced to abide by.
Well, I think that would be all. Yes. So let's all give them a round of applause. Thank you, Mari-Liis, and thank you, Oliver, for joining us today. And we're going to have our next crypto event already next month, 3rd Thursday. So I hope you can all join, and thank you very much, everyone who watched us on Zoom as well. And yeah. Third Thursday of the month. I think it was 6th of November, maybe. Not sure. Check the calendar. Thank you. Bye. Bye, Bitcoin.